Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. HSBC CEO Noel Quinn is set to retire. The lender making the surprise announcement as it reports a slight beat and unveils a $3 billion buyback. Japanese stocks rally after Monday's holiday and a wild 24 hours for the yen on intervention speculation. Chinese stocks, meanwhile, edge lower despite another positive factory activity print. In Europe, traders await the latest inflation numbers and clues for potential ECB rate cuts. This is a slew of top corporates report with a focus on autos and airlines. And the numbers crossing right now when it comes to Mercedes and their earnings, scrutinising, of course, the margin and the guidance coming through from this German automaker. First quarter adjusted EBITDA, so earnings before interest and tax, coming in below the estimates. It's a miss in the first quarter for Mercedes. We knew it was going to be a challenging quarter, and the miss is there. 3.6 billion euros. The estimates had been for 3.71 billion euros. They still see full-year cars adjusted 10 to 12%, so they maintain their guidance in terms of the margin. The estimates had been for 11.1%, so at the low end, 10% of a range between 10 to 12%. They've struggled, of course, with input prices. We know that. We're going to try and get more detail in terms of the key Chinese market for this company. Cost inflation, we know, has been a challenge, and that has hit some of the volumes in the first quarter. We're looking for an update in terms of those supply constraints. They are, again, coming through with the first quarter adjusted earnings that is coming in below the estimates for Mercedes, 3.6 billion, the estimates of 3.71 billion euros. So a miss for Mercedes in the first quarter. Let's switch focus to the airlines then, and Lufthansa, the German airline, of course, coming through. It struggled with industrial action. Lufthansa to cut costs and stop projects. We know that profit has been hit by those strikes, and the first quarter revenue is a miss for Lufthansa. First quarter revenue coming in at 7.39 billion euros, so just below 7.4 billion euros. The estimates had been for 7.53 billion, so it's a miss for Lufthansa in the first quarter. And again, we knew it was going to be a challenging quarter for this airline. They gave a profit warning 2 weeks ago, and they have faced those industrial action challenges as well. Looking for any updates on the deal to buy a stake in Italy's ITA and the impact of the Middle East and the challenges, the crisis there, of course, because they have cut flights and reduced and suspended flights to cities including Tel Aviv, Tehran and Beirut. But it's a miss for the first quarter for Lufthansa as well, coming in, again, 7.39 billion euros. Below the estimates, they're looking to reduce costs and stop new projects on those first quarter losses. So we keep an eye, of course, on all the earnings, and it is another big day on the earnings front and how that ties into the markets. Checking in on your markets right now, macro day as well in terms of the data that's coming through from Europe in terms of the inflation story, and of course the data coming out of China, which was positive in terms of that factory gate for the second straight month. Nonetheless, Chinese equities have struggled so far in the session. European futures currently flat after a decent session yesterday. FTSE 100, though, looking to very modest gains, looking to add about 4 points. We keep across the HSBC story for you, of course. S&P futures stateside looking to modest losses of 0.1%. NASDAQ futures currently flat. Let's get the details then on that HSBC story. And again, the surprise that the CEO, Noel Quinn, is unexpectedly stepping down. The lender starting a search for a successor. The surprise move coming as the bank reported pre-tax profit that slightly beat expectations and announced a share buyback, a new buyback, an additional $3 billion. Charlie Wells standing by for the details. What is the significance then, Charlie, of this surprise announcement around Noel Quinn, the CEO, retiring?
Yeah, well, Tom, this is very dramatic. This was not expected by analysts. This was not expected really by anyone. And I think focusing on that issue of drama, that really is the adjective that characterizes Quinn's time at the head of this bank. I mean, you know, he came on first as interim CEO, taking over for John Flint, who'd only been in that position for 18 months before being ousted. He was officially named after an extensive search, and that was really in the height of COVID. He also oversaw a period of time at the bank where there have been, as you very well know, dramatic tensions between East and West. HSBC, of course, has long billed itself as that sort of bridge between the East and the West, but tensions have been ramping up between China and the West. And of course, you know, Quinn simplified the bank. He really kind of helped with that pivot to Asia, and he had a really interesting background. He started his first job was actually digging holes at a building site. He then pivoted into a bank that was ultimately acquired by HSBC in 1992. So quite an interesting time through HSBC, but he now says that he's looking to build a portfolio career, but it'll be interesting to find out why he left this post later today.
Yeah, the portfolio career sounds kind of attractive, doesn't it, to many? So he'd been there 37 years. He'd been at the helm for as CEO for about 5 years, as you say, so really consequential. And they continue that search within the bank and externally as well for his successor. When it comes to the earnings, so they come through with the buyback. That stood out as well. What other details come through from the earnings? How consequential? What does that tell us about the health of the bank? They come through an additional $3 billion.
Yeah, so it's surprising that they made this announcement. It's surprising that we're seeing this leadership change at a time when the bank has actually been performing relatively well. So they are very interest rate sensitive, and we did see that their net interest margin was a beat. So that's positive for the bank. But their forward guidance was actually in line with what they were talking about in February when they had full year results, and that may disappoint some people because there has been this hope that HSBC can kind of diversify away from being so reliant on net interest income. And we're seeing some positive signs in some of these earnings. It's looking like they're, having a positive story to tell on wealth management, which is really important. And also the hope is that we see some strength in transaction banking, but we're going to have to parse through some of these earnings as they come through.
Okay, so from HSBC to Santander then, of course, a major Spanish lender, a major lender across the Eurozone as well, across Europe. What are the details when it comes to Santander's earnings?
Yeah, so a little bit of a mixed bag. So they reported net income for the first quarter that actually missed the average analyst estimate, but underneath they had a positive story to tell. Loan loss provisions were actually better than expected. Net interest income, which a lot of people had been focusing on, was also better than expected. And I mean, the story of European banks this year and recently has been one that's been positive. So Santander's share price, it's up 53% from a year ago. When you talk about European banks, their shares have actually been really performing. It's kind of been, serious gains that have really, in Europe, outperformed other sectors. So let's see how markets respond to Santander. But at least on net interest income and loan loss provisions, better than expected. Okay, Charlie Wells breaking down the big news coming through from HSBC and the earnings, of course, on Santander. Charlie Wells, thank you very much indeed. We're going to be speaking, by the way, with the Santander CFO, Jesus Garcia Cantera, in the next hour. So stay tuned for that conversation starting at 7:10 a.m. UK time. Also coming up, our exclusive conversation with CaixaBank CEO Gonzalo Gotazara Rotacci after the Spanish lender posted first quarter results as well. So from European banks and arguably an Asian bank, HSBC, depending how you look at it, let's see how the Chinese banks are faring and bring in at this point Avril Hong, standing by in Singapore with a check on the Asian markets. And first off, what is playing out for those Chinese lenders? Avril.
Yeah, it's a bit of a mixed bag if you look at their performance in trade today, but I think the takeaway is how being increasingly called upon to support the Chinese economy, that is really showing up as a cost of that. I'll take you to that page in just a bit, but I'll take a look at what we're seeing across the major indices, because today was also a day where we got the PMIs from China, and the non-manufacturing was a miss, but on the factory activity, it was better than expected, and there was a gain for a second month, expansion for a second month, I should say. So there seems to be some corners of the market who think that this recovery in China does have legs, although it's a very patchy one, and probably why we're seeing the Hang Seng erasing gains from earlier on in the session, along with the CSI 300 that's dipped into negative territory. Not quite convinced traders here. And we're also seeing in the Asia Pacific today, Japan's back from that holiday. It's running higher along with the Kospi, though not by much. We'll see if those Apple, Amazon earnings later in the week help to keep up the momentum for some of these indices. But flip the board, let's take a look at what we're seeing on these Chinese lenders, the likes of ICBC, Agbank, Bank of China, China Construction. These are the major lenders that have been called upon to cut those lending rates to support the Chinese economy. They all saw their profits drop and their margins being squeezed. We have the likes of Bloomberg Intelligence position, saying that some of the risk going forward could include margin contraction and provisions as they're, making accounts for all these real estate woes in the country. Let's flip the board and take a look at what we're seeing in some of the other movers in the Asia Pacific, because we also got those earnings from Samsung Electronics, and the chip business is coming back to profitability. First time since 2022. It's helped along by the AI boom. This is why we're seeing it outpacing its smaller rival, SK Hynix. It's down today, but of course, this rival is one that has an edge in high bandwidth memory. The other big gainer that we're seeing in the Asia Pacific today is Mitsubishi Electric. This is thanks to its full year forecast coming much higher than the average analyst estimate. Okay, let's take a look at what we're seeing on dollar yen, because I'm sure you are keeping a really close eye on it, Tom. And something to note here as we weigh just whether the finance ministry did step into the market is that we did see those huge swings, that volatility yesterday, and this mirrors what we saw in late 2022 when the finance ministry did actually step in. So something to consider as we wait for confirmation on this, Tom.
OK, Avril Hong with the check on the Asia markets and a lens still on the Japanese yen for us, as well as those Chinese lenders. Avril, thank you very much indeed. We'll stay with the yen story then. Currency traders warning that Japan's government is going to need to act repeatedly to buoy the yen. That's a view coming through from some currency traders, at least, given the economic forces and the case for further depreciation, that yield differential, of course, between the Federal Reserve, or at least Japanese debt, and the Treasury story that we're seeing over in the US. Let's bring in Mark Cranfield then from Bloomberg's MLive team. A little bit more stability in the yen in terms of the session today, a little bit less volatility, 156 versus the US dollar. Are traders convinced at this point, Mark?
No, they're not convinced at all. It's a much tougher situation for the Japanese authorities to try and really stabilise the yen compared to 2022, partly from their own making, really. Unfortunately, you have to say that the Japanese people responsible for managing the yen have fumbled a lot of the messaging in recent weeks, and they haven't had any help from the Bank of Japan either. So we did have Governor Ueda previously saying that the yen was very important as a part of the factors being considered for monetary policy. And yet when it came to last week's Bank of Japan decision, he backed away from it and barely mentioned it. And especially during his press conference, he really shied away from the yen as well. So no help from that side. The Japanese authorities have previously talked about this 10 yen number where they would be very concerned. It went sailing through that. That would have been 156. We've seen 160 this week already. So from a trader's point of view, it's really like the dog that doesn't bite. They hear lots of mumbling going on from Japanese authorities and they don't see anything. Then yesterday, we finally get to a big round number, 160. Traders themselves may have decided that's quite sufficient and take some profits. And then there are moves which look suspiciously like intervention on the back of it. It hasn't come down, as you say, very far, really. So we're going to need repeated moves to really drum the message in. And we have the Federal Reserve coming this week, who could upend everything by sounding a bit more hawkish than expected.
Is that the expectation, Mark, that there is going to be that hawkish tilt from the Fed? Given the consequences, of course, we think about the BOJ, the impacts globally of this. Clearly, there will be those in Japan watching this event with an eagle eye, as many of us will be. Is the hawkish pivot expected from Jay Powell and co?
I think to an extent, but maybe he can go even further, because this whole idea that the Federal Reserve has 3 interest rate cuts still on the table, I think most people are dismissing that as being way too optimistic, considering the strength of data, particularly from the inflation numbers, which have just come out even last week. Still way too hot from the Fed's point of view. The employment situation is too strong as well. So he's got to dial back maybe even further, particularly as simply time is running out. Here we are on the verge of turning into May, almost half the year gone. The time to be able to cut 3 times is definitely running out. Whether he can even justify cutting once in the final quarter of the year, even that is in doubt as well. So he needs to sound pretty cautious. How cautious he goes, it could be a bit further than the market expects, which would certainly impact the Treasury market. If the Treasury yields back up, that will support the US dollar. Dollar yen could easily be back where we saw it at the beginning of the week.
OK, Mark Cranfield wrapping and tying a bow around that story for us. The yen, of course, and the linkages to what happens with the Fed and that expected rhetoric change from Jay Powell, at least compared to what we heard from him back in December. Mark Cranfield from our own team with the analysis. Thank you very much indeed. Here's what else to think about today. Here's what else to put on your docket then, on your agenda. We've had the earnings miss coming through from Mercedes. We're going to get VW, another, of course, major German automaker, coming through 6:30 a.m. UK time. And again, it's expected to be a challenging quarter for that company as well. Will they come through with a miss in line with the kind of pressure that we've seen coming through from Mercedes? Volkswagen then, 6:30 a.m. UK time. Meanwhile, on the macro front, Eurozone CPI and GDP data out at 10 a.m. UK time, amid expectation, of course, that the ECB will cut in June. Will that data change that view then in terms of the ECB's response to the inflation story in the Eurozone? And then back to the earnings story, the major one coming through from the US later today, the most interesting one, as far as I'm concerned, is Amazon. That reporting then after market, and I think the lens should be, of course, on AWS, the cloud service. Given the demand we've seen from the likes of Microsoft and Alphabet for their cloud services, AWS, Amazon will be scrutinised after market later today. You can get a roundup, by the way, of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go for the details on that. And, of course, we've got all the coverage around HSBC and the surprise announcement around the CEO, Noel Quinn, retiring and the search for a successor. Coming up, the latest on ceasefire talks in the Middle East as campus protests call for an end to violence and those protests spread from the US to Europe. Plus, later on, we're going to continue the day's earnings bonanza, as I mentioned, with VW and Adidas as well. Does the turnaround story continue to be one of modest optimism for the German retailer? That company set to report in the next 20 minutes or so. We bring the details in the analysis. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Let's turn to South Africa's keenly anticipated election now, which is just 1 month away. A party backed by former President Jacob Zuma, remember him, says it expects to be in government after the vote. The MK party says it also plans to raise additional state revenue by increasing capital gains and inheritance taxes once in office. Let's get more then from Bloomberg's Jennifer Tabasaja in Johannesburg. Jen, you interviewed a spokesperson for Jacob Zuma, Jacob Zuma's new party. Look, this is obviously a man who is involved and wrapped up in all sorts of different controversies. What are their expectations, though, for the vote?
Yeah, Tom, I think it was interesting that you said remember him, because if you're here in South Africa, he's basically in the media just about every day. And it's largely because of this MK party and the increasing support that they've been getting from the population. Now, I just want to take you to a poll that we got on Friday from Ipsos, which is showing, which we've been expecting, eroding support for the ruling ANC. Of course, that was the party that Jacob Zuma was formerly a part of, consolidating around 40%. But the MK party, surprisingly, getting north of 8%, based on this Ipsos poll. But when we spoke to the spokesperson yesterday, he actually has a completely different perspective on what we could potentially see on voting day. Take a listen to what he told us.
The ANC is not going to get more than 30%. That's the reality. And what we're seeing after the 29th, they say the 30th, is a resounding response of change. These are landmark elections, and what we're seeing here is the outcomes of inevitability, which is going to be changed.
Yeah, so Tom, that was Camelo. They're talking about the support that they believe the ANC is going to get. He was saying, though, he believes the MK party could get 2/3 support. A lot of the support that we're seeing is coming from Jacob Zuma's home province of KwaZulu-Natal. But the big question is, what are we going to see come May 29th? And the jury's still out on really what we should expect.
OK, so this is a political party that ultimately could, certainly that would be the aspiration, become at least a kingmaker post this election, potentially. Tell us about some of the party's policies then, Jen.
Yeah, it's fascinating. I mean, really, what we heard from the party is that they're really focusing on what they call a post-apartheid deconstruction when it comes to their economic policies. And many people are describing the MK party as very populist, and they've been gaining a lot of support, really, as I mentioned, in a lot of these smaller provinces. And largely, you know, it's mainly due to the fact that they are putting Jacob Zuma fully at the helm and saying that because he has been there, he has done that before, he is somebody who should be re-elected. So a number of their other policies include the nationalization of the central bank, also commercial lenders. One of their big proposals is the expropriation of land without compensation, which is a big point of contention here in South Africa. And also, you know, a number of their policies are focused on developmental policies in particular, such as free education, also a basic salary for job workers. But we asked them yesterday, how are they actually going to pay for this? And they were saying their focus is more on capital gains, or excuse me, capital taxation instead of labor taxation. And so it's quite interesting. We're going to have to see really how the support moves for this party and for the others going forward.
OK, really fascinating. Bloomberg's Jen Zabasajja, thank you very much indeed. And one of the contenders within this crucial election, of course, for South Africa. And you can catch our monthly show, by the way, Africa Amplified. It's this Friday for a special programme on what to expect in South Africa's election. There's plenty more coming up when you keep across the earnings story, of course, with a focus on Adidas and VW as well. And we'll bring you the details as those lines cross. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, US University, Columbia, has started suspending students refusing to leave an encampment protesting the Israel-Gaza war. Last week, more than 100 protesters were arrested, drawing fierce backlash and sparking a domino effect of pro-Palestinian demonstrations at campuses across the nation. Columbia says talks with protesters are ongoing, and police have moved into the Sorbonne in France to clear out dozens of demonstrations there. So it's moving from the US to Europe. Protests have also been held at the elite Sciences Po University in Paris as well. Bloomberg, meanwhile, learning that the US and its allies have begun a quiet diplomatic effort to try to dissuade the ICC from issuing arrest warrants for Israeli officials. Officials are concerned it may potentially jeopardise hopes of a ceasefire agreement with Hamas. Right, let's get the details then with Bloomberg's Dana Crace, who's standing by. Dana, what do we know then about the potential of this ICC, this International Criminal Court warrant, what it could mean for Israeli officials?
Good morning. Yes, so the U.S. and its allies are concerned that any arrest warrant from the ICC could potentially get Israel to opt out of ceasefire talks that have been going on for months, and now there is actually some kind of a prospect that they would reach a breakthrough. So the arrest warrants would potentially be against Israeli officials and Hamas leaderships as well. But the more worrying sign is that there are reports that Prime Minister Netanyahu could be on the list of these arrest warrants. And the U.S. now is trying or going on a diplomatic push to try to convince the court not to go ahead with this in order to give way or more time for the ceasefire talks to actually materialize into something.
OK, Bloomberg's Dana Crace, thank you very much indeed. And Dana, and of course, the rest of the team will be monitoring those potential ceasefire talks. Of course, there is relative optimism being voiced by the likes of the UK and the US around that ceasefire conversation, of course, and those talks and negotiations being led by the likes of Qatar and Egypt. We monitor that for you, of course, throughout the day. Plenty more coming up. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. HSBC CEO Noel Quinn is set to retire. The lender making the surprise announcement as it reports a slight beat and unveils a $3 billion buyback. Mercedes earnings plunge 34%, weighed down by model changes in Asia and sluggish demand for electric vehicles. And traders await the latest inflation numbers out of Europe and clues on the path of potential ECB rate cuts. GDP out of France growing 0.2% in the first quarter on quarter, slightly above the estimates. We're bringing the earnings story as well. Adidas coming through with first quarter earnings. First quarter revenues for Adidas of $5.46 billion for Adidas. That's up 3.5% year on year. We're also getting operating margin for Adidas of €336 million versus €60 million year on year. And in terms of the gross margin for a company that's undergoing, of course, a reshaping, at least given the challenges around Yeezy and its connections, of course, to that particular influencer and celebrity. First quarter margins coming through 51.2% for Adidas, above what we saw previously, 44.8% year on year. So an increase in terms of the margins coming through for Adidas. It seems they are continuing to make some progress on this front. We, of course, continue to watch in terms of the pipeline of new products coming through for this retailer, this fashion retailer. They still see full-year operating profit, so they're maintaining their guidance. They still see full-year operating profit of between 700 million to 700 million euros. That is the estimates. First, the estimates are 988 million. But again, they are reiterating their view around full-year operating profits of around 700 million euros. So the top line coming through from Adidas first quarter in terms of the margin story, certainly 51.2%, an improvement there coming through from Adidas. But in terms of the inventories in the first quarter, it's a miss. It is a miss for Adidas in terms of those inventories. We switch focus to the automaker VW after a miss for Mercedes. We're going to go, of course, scrutinise the Chinese market for this company. It sees full-year operating profit return on sales of 7 to 7.5%. So operating return on sales of 7 to 7.5% being flagged. That's the redhead for VW. The earnings falling 20% on softer sales and higher costs. We'll get the details and get the analysis now with Bloomberg's Ollie Crook, who's standing by. What stands out to you, Ollie, on these VW earnings? What is the kind of the pressure point that's coming through for this German automaker at this point?
Yeah, well, when you have a drop of sort of earnings by 20%, it's hard for that to not stand out. Though that had been sort of flagged, admittedly, in the sort of earnings. We saw already that their vehicle sales had been struggling in the first quarter, and we know this was going to be a challenging quarter for Volkswagen and the car industry. But earnings down 20% year on year. I mean, the industry is suffering from tough comps from the first quarter of last year, but it's more than was expected. And what you brought up there, Tom, the sort of the red headline that they were flagging, which is that their margin, they're still expecting a 7 to 7.5% margin for the full year, but what it actually came in at for this quarter was 6.1%, and that is substantially lower than obviously what their target is, and it is lower than what analysts had expected at 6.4%. They have, however, confirmed their outlook. Their vehicle sales came in line for the quarter, so overall they're still sort of saying that this year is going to sort of be in line with what they had expected, but this is a tough quarter, and they're hoping probably that this is going to be the low point, but this is what we're seeing across the industry right now.
Yeah, look, Mercedes was a challenge as well, Ollie, and part of it is because, of course, they're struggling with supply chain issues. There's the broader story about the slowdown around EVs and the sluggishness more generally across this auto sector. To what extent are we seeing echoes of a similar story at Mercedes?
Yeah, so I think there's three things happening for Mercedes. So one, there's just the general cyclical downturn within the auto industry, which every company is sort of suffering from, right? And there's the rate story, it's the economic outlook story. Then there is the second part of it, which is also the EV story. So Mercedes and Volkswagen, for example, they had EV sales that fell in the first quarter. That is not good when you are dealing with what is going to be the sort of growth engine of the future of your business. BMW managed to outshine them on that. And then the third story for Mercedes, and we saw it from Porsche out on Friday, is the luxury trade is no no longer intact, right? This was the thing that we were talking about, Tom, throughout all of this sort of the issues with inflation. You know, we saw some of the passenger and mass vehicle market being squeezed, but the luxury trade was still intact. No longer so. Mercedes is struggling to sell those higher price vehicles, particularly in China. We saw the same thing with Porsche out. Some real questions about profitability going forward. So yeah, this is going to be a tough quarter. They say that it's the trough, but again, we'll have to see how the economic picture develops.
Yeah, and whether investors actually buy into the view that this is a trough and that things will improve from here. But clearly the challenges are pretty acute right now for these German automakers. Oliver Crook breaking down these numbers for us. Thank you very much indeed. Just to clarify on the Adidas story, full year sees full year operating profit of about 700 million euros, below the estimates of 988 million euros. So the full year operating profit estimates coming through from Adidas below, quite significantly below the estimates, in fact. Let's go to the macro story now. French GDP coming in slightly higher than the estimates. We also have, of course, inflation data coming out of the Eurozone as well later today as we build up to expectations that the ECB will cut in June. But will any of that data change that view? Let's bring in at this point then Zoe Schneeweiss for the details and the takeaway. Zoe, what do you take away from this GDP print out of France? Slightly better than expected.
Yes, that's very good news. Economists were expecting 0.1% growth, and in fact, we had 0.2% growth. And moreover, if you dig into the data, the consumer spending numbers accelerated as well. So that overall is good news. Just as a reminder, the euro area was in fact in a very shallow recession in the second half of last year. So all those data now out of France are good news that in fact the euro area will have exited that recession and also grown in the first quarter.
And what are we expecting in terms of the growth picture for the broader euro area, Zoe?
Yeah. So I mentioned the euro area. The euro area one already has, we expect 0.1. Before that, we get data out of Spain, Italy, and Germany. Germany is probably the one we're watching most closely here. Germany had quite a bad contraction at the end, and in the fourth quarter. So and initially we'd have thought that they also would be contracting, but then about 2 weeks ago, the Bundesbank changed tack and said there will be slight growth, and economists now also are expecting that slight growth. The economy that will probably have the strongest growth of the major ones in the first quarter will be Spain. We get those data in just over an hour's time, and those are expected to be 0.4. For what it's worth, that is a slowdown from the previous quarter, but still 0.4 is a very strong number.
Yeah, indeed. And Spain has been outperforming many within the Eurozone, hasn't it? In terms of the inflation story, is there anything out of the data later today that could move the dial for the ECB at this point?
Yes, the inflation data are quite interesting. These are the inflation data for April. And if economists are to be trusted, then the first time now this year, inflation will slowdown will have stalled. So economists are expecting the same number as in March. That won't actually change the June cut. That June cut is more or less baked in. There have to be some huge geopolitical uproar and some big move in oil for that to change. But what it does influence is what's the path after that June cut. Some of the more dovish policymakers are pushing for back-to-back rate cuts, and a lot of the more hawkish ones. Just last night, the Vice President Louis de Guindos said we need to be very careful after June. So inflation slowdown, stalling is just that kind of number that will support the arguments of the more cautious policymakers.
OK, Zoe Schneeweiss with a really great setup ahead, of course, of that inflation data and the take there coming through from the GDP print out of France. Slightly stronger than estimated, of course, and the preview around Spanish growth as well. Speaking of Spain, Pedro Sanchez announcing he's not going to resign as Spain's Prime Minister after all, vowing to stay on to, quote, defend democracy as he drew a 5-day national guessing game to an uncertain close.
I have decided to continue even with greater strength, if that's possible, leading the presidency of the Spanish government.
OK, let's get more then with Bloomberg's Rodrigo Oduhuela. Rodrigo, what exactly happened with this political crisis? Was this a play by Sanchez as he looks to those elections in Catalonia and Europe? Where do things stand now?
Well, I mean, what exactly happened was extremely confusing and bizarre. We actually have an analyst in one of our stories today saying it was ridiculous because he came out on Wednesday, surprised everybody and said, I need 5 days to think and reflect about my future, which kind of indicated that he may step down. It's very uncommon for a head of state or a prime minister to come out and say, I'm going to take 5 days to think. And the reason for this was because there were some reports, which a lot of people are saying are flimsy, on his wife's business dealings. Now, this led an organization linked to the far right to file a criminal complaint, and a judge opened an investigation. And this really hit with him, right? And this is what kind of unsettled him and pushed him to make this decision. 5 days later, after everyone was left in the dark, he comes out and says, actually, I'll stay. Now, this was the last scenario anyone expected. There were other, there was a feeling that he could call elections, seek a confidence vote. But as days had gone by, everyone was expecting him to step down. And then suddenly he comes and is like, no, I'll stay and I'll just keep on governing. And so people were like scratching their head and saying, what's going on? And then he came out with this kind of narrative that what is needed in Spain is to regenerate democracy and fight against fake news and the use of courts to go after certain politicians, which is his argument. Obviously, the opposition is saying that he's playing a victim, is playing the victim card, and that there isn't any regeneration that is actually needed.
So, Rodrigo, what next then for Sanchez and his government?
Well, the first thing is he's going on a semi-media blitz. He had a long interview yesterday on the state television broadcaster. He's going on a pro-government radio today to explain what he sees. But the key dates are May 12, when there's a big election in Catalonia, which, as you know, is very important for Spain because there's a very strong separatist movement there, which has been around for 6 years, and he's been trying to diffuse it. So that's a very big election because either his party can win or one of the separatists can win. So that's a big date for him in a few weeks. And then obviously we have the June 9 European elections, which in Spain are also key because they're seen as a kind of a vote or a ballot on his government as well. So those are the two big landmarks he has going forward. And after that, we'll see what he does. His government is weak and he needs to garner all the support he can.
Rodrigo, I just wonder, you and the team sitting there in Madrid, the connections and the sources you speak to within the investor and business community, how much concern is there about the kind of political drama that we're seeing?
People are, within the business community, there's a lot of concern about instability and about a bit of the erratic movements the government has. Sanchez has a bit of some people call it a bit of a bipolar relationship with business. He wants to be close to business. He wants to be seen as business friendly. He wants to be seen as a centrist and with a fluid relationship with the business community. However, a lot of his policies over the years have not gone down well with business types, and also he's had the problem that he's actually come out over the years whenever he gets angry with one or other business stance, and he has come out and actually named business executives by name and sort of we could even call it a naming and shaming campaign by the Prime Minister. So any more of this erratic behavior, as we saw over these last few days, doesn't help. And then there are 3 or 4 situations in which the government is moving to buy stakes or put money behind or intervene in big corporations.
Okay, really interesting context. Appreciate the take there coming through from Rodrigo Orihuela, of course, out of our Madrid bureau, on the politics of Spain and what it means for business and investor flows into that country. Let's check in on these markets then. A bit of a subdued day, at least. The futures have lagged now across European futures, pointing lower by 0.1%. We've had the earnings picture coming through, and certainly the German corporates are posing a bit of a challenge, it seems, to this equity story. Lufthansa coming through with a miss. Mercedes and Volkswagen also painting a picture of a challenging auto sector. US futures, S&P E-mini is pointing lower by 0.2%. Of course, we have the Amazon story and that earnings detail out later today after the close in the US. S&P futures currently pointing lower by 0.2%. No idea why Zillow Group's in that board. Nasdaq futures currently pointing at 17,880, lower by 24 points. I believe we have a cross-asset board as well. We're going to check in on some of the currencies. The yen, there's a little bit more stability in the session today around that Japanese currency, around all the speculation, of course, around intervention, the volatility that we saw yesterday, which, of course, was pronounced. 156, currently 75 on the Japanese yen. Euro-dollar at 106, down 0.2% as we build up to the inflation data that will cross later today out of the Eurozone. The US 2-year after yields came in and dropped about 5 basis points yesterday, 496 currently at the front end. Gold, 2,322, currently softer by 0.6%. And Brent at $88 a barrel, down 0.4%, with an eye, of course, on the ceasefire debate and conversation that continues to transpire in the Middle East. Coming up, a strong quarter for Adidas. We're going to dig into the numbers for that company. It's a bit of a mixed picture, but they have that turnaround story, of course, as they try to reinvent themselves after the challenges of the Yeezy brand. That is next. This is Bloomberg. OK, welcome back to Bloomberg Daybreak Europe. So Adidas coming out with numbers about, 20 minutes ago or so. First quarter revenue coming in at just shy of 5.5 billion euros. That was a 3.5% increase year on year. In terms of gross margins, coming in at 51.2%, so an improvement in terms of the margin story for Adidas versus year on year. And in terms of operating profit as well, 336 million euros versus 60 million. Again, that's a year on year comparison. First quarter operating profit also an improvement there for Adidas. Let's get the details, though, with Dasha Afanasieva, who's been looking at the numbers for us. What is the top line that comes through for you then, Dasha, on these results for Adidas?
Morning, Tom. So on the one hand, you've got a revenue beat, you've got an increase in the expected operating profit, and almost all regions are performing well, including a rebound in China, where, we had these issues with international brands being unpopular, being boycotted. But on the downside, a very weak quarter for North America, and there's a slight miss on inventories. And of course, we just recently found out that Prime Minister Rishi Sunak actually wears Sambas. So I don't count that as good news.
I don't know if that's good news or bad news for Adidas.
I don't think that's very cool.
Given his poll ratings, that might be a drag. Yeah, OK.
The poll ratings,
and there's a bit of a divergence with Nike then, in terms of the kind of a role reversal. Is that what we're seeing?
That is what we're seeing, because I think if you look over the last 5 years, the majority of that time period, Nike would be trading at a premium. For the quarters in recent years, it has been the cooler of the two. And Adidas has obviously suffered with all these problems with Kanye West and the Yeezy partnership, that it's actually getting out of incredibly elegantly, given how bad it was, by still selling the stock. So, that's an environmental point right there, donating some of the money to diversity causes. So now we're seeing that Adidas is actually trading at a premium to Nike. But I think what's interesting is that they're both faced with very similar problems, which is that there are a lot of competitors, there are a lot of smaller companies, niche products that offer something really special. So both of these brands rely on kind of something like Adidas Originals or Yeezy suddenly being really, really popular. And then you don't know when it's going to turn. You don't know when a unpopular prime minister is going to suddenly plummet the product. So you have to have a constant conveyor belt of these products and be spotting, and as Adidas has done this quarter, actually increase supply to meet these spikes in demand. OK,
Dasha Afanasieva, thank you very much indeed. When you come in sporting the Sambas, then we'll know maybe that the turnaround has been complete for Adidas. Dasha, thank you very much indeed for breaking down those numbers. Let's switch focus to the tech sector now, where Samsung's quarterly profit topped estimates. A good story coming through from Samsung with a boom in AI demand, helping reverse losses in its chip division. Senior analyst at Bloomberg Intelligence, Rob Lee, standing by for us with the details. Robert, what stood out to you then from these Samsung results?
Yeah, good morning. There's only two divisions within Samsung that really matter to investors, and one is smartphones, and that delivered solid numbers with a pretty upbeat outlook, depending on the sell-through, of course, into the year-end. But more importantly, I think people's eyes were on the memory chip business. That was loss-making. Had a very challenging year last year, but the core drivers of that being DRAM and NAND flash memory chips swung back into profit, driving that business into profit, and subsequently, the company offered a pretty upbeat outlook into the end of the year, with AI delivering a little bit of icing on the cake, perhaps. So the numbers were solid, the outlook was solid. What's not to like, I guess?
OK, so we move from Samsung then to Amazon. What are you going to be scrutinising from their numbers then, Rob?
OK, again, 3 core focuses within Amazon numbers. Obviously, core of their business is ad-related. And as we saw in Alphabet last week, ads, given the underlying strength in the US economy, is holding up pretty nicely at the moment. So I'd imagine that's a trend we'll see confirmed within Amazon. Secondly is obviously their e-commerce business. Again, the inherent strength within the US economy should benefit them there. And then for those countries that celebrate Easter, it was an early Easter this year, that should also help them. So I think the market expectation is probably the revenue for the business as a whole should come at the top end of expectations. And then finally, there's going to be the interest on the AI, and obviously with Amazon Web Services, which both services a broader corporate customer base, but with the AI or incremental AI revenue hopefully coming through as well. So I think going into these numbers, expectations are quite high, but I would say probably justifiably so this time.
OK, senior analyst at Bloomberg Intelligence, Rob Lee, with a nice preview there of what to expect from Amazon. We're going to bring you plenty more in the next couple of minutes, including some lines crossing from HSBC's CEO. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. So, yes, the surprise coming through from HSBC and the announcement that the CEO, Noel Quinn, will be stepping down, retiring. They are looking internally and externally for the candidate to take over from Noel Quinn. He's been speaking to the media on a conference call, saying that it is an ideal time for new leadership at HSBC. He is going on, he says, to build out a portfolio career. He wants to get a better balance between work and life. He's been at the company, by the way, at HSBC, Europe's largest lender, for about 37 years and has been the CEO for about 5 years. The stock is up a little over 20% since he took over and has worked through a number, of course, of challenges for that bank and has streamlined it to some extent as well as, by the way, taking over Silicon Valley Bank UK with that tilt to technology. But that was the big surprise that came through. They announced an increase and an additional $3 billion buyback. The earnings were a modest beat for HSBC, but the news, of course, that the CEO of Europe's largest lender will be retiring. By the way, we're going to be speaking to the CFO of Santander in the next hour. That conversation starts at 7:10 a.m. UK time. Markets Today is up next. This is Bloomberg.